Hello there and welcome to yet another video from Generational Wealth Traders. Now, in this video, I hope it's going to be a short and straight to the point video. I am going to be sharing with you how I get to stay in trades longer. If you like, how I get to stay in winning trades longer. Perhaps you might even say how not to exit a winning trade too quickly. Now, recently, a member of our Telegram community, Forex Trading Telegram community, asked a question as to how I do get to stay in trades longer. Obviously, I'm sure, like he did confess, it is the case that he tends to exit winning positions too quickly. And I know that is the issue a number of traders actually have out there. So I am going to be sharing that with you today. Let's go straight to my chart. There's a trade I currently am in at the moment. Let me just share that screen with you. Okay, so there we go. So as you can see, this trade now, I'm currently up by about 66 pips, even as you can see at the bottom right-hand corner. If I wanted to stay in this trade for longer, what exactly do I need to do? Now, there are a number of ways in which you can approach this. I'm going to be sharing just one with you today. If we have time, I might share another. Otherwise, I could do that in another video. So one of the ways to know as to whether to stay in a trade or exit the trade is to pull up your moving average. Pull up the moving average. I mean, you could use exponential, you could use the simple moving average. I would prefer to use the exponential because it is more sensitive, as it were. With regards to taking trades, if you're looking for to use the moving average as a signal or a confirmation, the exponential is more sensitive, but it also then means that you could get more fake outs using the exponential as opposed to the simple moving average. But let's go with the exponential today. And if you notice here, I'm leaving it at 10 EMA. I could have used 15, I could have used 20, but let's go with 10. The smaller it is, the better it is with regards to telling me how powerful the trend is. If I was to use a bigger moving average, obviously it means that even at, let me make this bigger. Even as you have the moving average here, the 10, if I was to use the 20, it will be further away from the candle. But let's stick with the 10. That tells me the trend is strong. Now, how would I, use this? Now, see, I got in the trade here. I mean, never mind, I am on the 15-minute time frame. I'm just using this for for determining whether to come out or not. I actually entered this trade based on, what I saw on a higher time frame, the 4-hour. So being here now, I entered the trade here. I hadn't, pulled up the moving average up until this time during the video, because I had done my analysis, like I said, on the higher time frame. I saw that, there was going to be an upside, and I believe this is probably going to give me more pips. And I want to decide whether to come out or when to stay. Well, I am staying anyway, but for the sake of the video. Now, I entered the trade here, and you can see all along, the price was kind of like going below and above the candle, so on and so forth, until it got here where it basically separated from the moving average. Oh, sorry, did I say anything else? I meant the candle was going, or the price was going over and below the moving average until it got here when it basically separated from the moving average and stayed away from it. It stayed away from it all the way up. Candle after candle kept on pushing higher, and it did not even come close, to the moving average. Now, guess what now? Where we are now is the point at which the price finally touched the candle, but as you can see, it did not break lower. It touched the candle. At this point, if I had seen this with the price touching the candle or closing below the candle, the moving average, bear with me, I would then pull up my horizontal line as a marker as to see if there's going to be a follow through. I'll take that again. The price stayed away from the moving average all along until here, where it closed on the moving average or below it. I will place my marker there to see if the next candle closes below. If the next candle had closed below, I could then decide, okay, I think it's time to get out of this trade. So you're basically using the moving average as a way of identifying a reversal of the trend. That is basically what it is. It's a moving average. You could have used a trend line. Okay, that's the second way of finding out. You could have used a trend line. That will be for another video, guys. You could have also used a trend line to determine when to come out. I mean, you can see here now, if I was to connect using a trend line, I perhaps would go on a higher time frame. You know, perhaps I could go on the 1 hour or maybe the 30 minute. Let's stick with the 1 hour, not the 4. I mean, I could use the 4 hour as well, you know, except that you might end up giving too much back to the market. Let's use the 4 hour. Let's prove a point. You could connect this high, you know, and it will be the case that if the price comes back, you know, to the trend line, you will come out. As you can see, you'll be giving away too much, 22 pips. I don't want to give away too much. Let's go to the 1 hour time frame. You could decide, let me connect these 2 points. Well, you will be giving away too much as well. So as you can see here, you know, in determining what tool to use, it's best to actually use the moving average on the 15 minute. So I would decide, okay, fine, I've placed my my horizontal line there. If the price breaks below, then I want to be out of this trade. And I want to give the trade more room to move. I could say, as opposed to using a break below the trend line, how about a break below a previous low? Oh, well, yeah, not a significant low, just a previous, you know, low, as it were, a previous drop of the candle. If you think of it this way, that was, you know, a low. You could decide to, you know, place your horizontal line there. If the price closes below or gets here, you want to be out of the trade. Now, like I say, there are a number of ways in which, you know, a number of tools or ways of finding out when to exit a trade, but we don't want to keep this video too long. I would say, let's leave it here for today. And in the next video, I'll be doing and showing you other ways of finding out how to stay in the trade. Now, listen to this, guys. It's hard enough getting or finding a good trade to get into. Why would you obviously then want to give away your profits back to the market just because you didn't know when to exit? I'm sure this would definitely help you. So even as you can see here, it seems as though the price is going to drop. But guess what? As it relates to this particular trade, I am staying in because I am going to be taking it over the weekend. It happens to be Friday today. I'm staying in. Why am I going to stay in? Because I am going to be hedging this position. I'm going to be hedging it so that even though it's now currently at about 60 pips, if I was to enter a trade in the opposite direction now, it means that going over the weekend into next week, I will still remain at 60 pip profit. Why? Because I have a long position and a short position using exactly the same lot size. It means I've locked in that profit. I would suggest you watch my other video on how to hedge, and win a losing trade. Take note of that. How to hedge and win a losing trade. It's in a video I did, you know, some time ago. It's proving very popular as well. I'll leave the link below or somewhere on this video so you can actually get to watch it. But in the meantime, again, you know, hit that like button for me and click on the notification bell so that when next I come out with yet another video, or perhaps we are having a live trading session on YouTube, hey, which we do at least once a week. You'll be one of the very first people to get notified. So hit that subscribe button for me and that like button as well. Well, that's it pretty much for this video. Until next video, stay blessed.